All right, we are live. Welcome back to London session. I am trying out a little short copper trade here, and I'm going to explain why. But first, let's do some housekeeping. So obviously I'm on Topstep here for all of my executions, whether it's combines or live. I do still have some combines on the Ninja Trader, but for my live stuff, I focus on Topstep. Now, we all know that Topstep is a community platform. You can help to shape it. So one of the things is that you can request any feature that you want to see, right? And you can have a look at the features that we already have. And if you can't find the feature that you want to see in there, you can actually create a new post, right? If it's already in there, you can upvote it, right? Okay, so that's one thing. Second thing, obviously, we have the London session. We have some new programming for you. We have new broadcasts. One of those is the London session. So welcome. Good to see you all. And the second one is that Dakota has added another day. So he's now streaming on Sundays from 8 p.m. CT, Central Time. So do catch him for the slow market session. I hear that he's going to be breaking down his methodology in the coming weeks. So that should be very exciting to see. Now, for the big news, massive news. Yesterday, a few of you were asking about the journaling in Topstep. Well, I'm very pleased to announce that journaling feature is now live in Topstep. So if you go to your days when you've traded, you can click into the day and then you can add a journal. Okay, you can write things down, you can screenshot things and throw them in there. So let's try that. Let's just screenshot a chart, for example. Let's go like this. And then I can throw it in there. And then you kind of have it there as a visual reminder of what the hell you were looking at when you were journaling. So I figured we should dedicate this session of how to journal efficiently. Because I think that's something that nobody really talks about. And everyone's like, oh, dear diary sort of moments. There is a good way to journal for maximum efficiency and to derive something from those journals, rather than just randomly plopping things in there and going, I was a Muppet today, got stuck in a position, moved, stops. Like, that's not proper journaling, right? That's just you bashing yourself. That's not going to help anyone. So in order to journal efficiently, I mean, yes, there should be an emotional checklist before you even begin. But the big thing is that you need to have certain systematic aspects of your trading that will help you get better. How do we do that? We look at things like the time of day, when your setup appeared, the level that you used to get in, price action or dome developments that you were looking at the time. So that kind of journaling is something that I want to talk about today. So let's have a look at my little thing that I've got here, which I always show. And where did my copper chart go? It was somewhere around here. Nope, that's gold. There it is. Okay. Gold has been a little bit quiet today, so this is why I'm trying copper, because it has been moving pretty decently for London session, which is not odd because there is a thing called the LME, London Metal Exchange, and they do trade copper there, so there's probably a lot of volume that comes in during that. And the way they do it, it's really weird. They do like 5-minute increments for every metal, and then they do something called curb trading where all metals are traded, including precious metals. Okay, so the way I like to do things is a little bit simplistic for maybe somebody who hasn't journaled properly before, because this is a compressed result of effectively 11 years of staring at intraday movement, and now I know when my setups appear, when I want to take them, and why. Okay, but if you're still new, you really want to have something like time of day in there, stop loss size that you used versus stop loss that should have been used, or something that would have been a better option so that the position survives, or maybe to minimize a drawdown, something related to timing. But time of day when your setups appear, very important. And to illustrate that, for example, you guys know that I'm pretty big on failed auctions, but failed auctions have a particular time of day when they're high probability in crude oil when I'm trading it for the New York session. So if I see a failed auction happening towards the end of the session, I'm not going to take that because I know it has a very low probability of continuation and working out. So I will actually use that to run the trade in the opposite direction, to just relying on the statistical probabilities of that setup. So if you don't have that in your plan, I would highly suggest that you start putting it in. So if we go back to the journal, you want to have a template, maybe a Word template that you can just copy and paste every day. So you can say level for hypothesis. I like to say hypo 1, hypo 2, hypo 3. I typically have about 3 to 4 hypos per day to account for both longs and shorts. That keeps me pretty unbiased. And then if something starts to break down, I will look at some of my other side of the story to see whether I can maybe find a trade in the opposite direction. This is why I'm relatively able to stay objective on the majority of the days. Like, obviously nobody's perfect, we're all human, but by the end of the day, you know, you should, if you leave yourself room in the DLL, obviously, you should have some sort of way to dig yourself out of a hole, if possible. And this is why I like to have the story for both sides, longs and shorts, right? So this is what we're trying to do with the journaling, but also journal it's a tracking tool, right? How well are you performing? How well are your setups doing? And how can you make it better? Maybe avoid the setups that are not working for you. That's definitely one thing. So let's say that you're constantly going level 4 hypothesis, VWAP, right? Something that a lot of people use. But let's say you get stuck in a range-bound day. What's going to happen? Well, you're going to be always getting stuck in the middle. So you can go recap, quiet day, got chopped up in the middle from VWAP. So what does that mean? It tells you that maybe on those days when things are quiet, VWAP is not a good trade location, right? So you need to change that. So use the journaling as a tracking tool to see what's working, what's not working, and then also time of day. When the setup appeared. So if it appeared at the open and you were right on direction but got run over, like let's say a lot of you trade NQ or something, just go try to wait for the first 15 minutes to develop. At least that, right? If you do well right at the open, full props to you. But I know that for the majority of people, that's not the case, especially not for the cash session in New York, which is like absolutely bonkers. But London is a little bit quieter, and today we have a very nice smooth movement in copper so far. I have some levels of interest down at the 4.35, 60, 70 area, and then further down 4.34, 40. So we're going to see if we can get there. And at that point, my second hypo is going to kick in. But if you're still new, like I said, time of day is something to consider. If you're super new and you keep getting stuck in, let's say, releases that you didn't even know are happening, maybe look at something like Financial Juice. They have a pretty good free tool. You can log in through, I think, Facebook or Google or something, and then you can just look at the econ a day. or economic calendar to the side and see what pertains to which market. You can sort of filter things out so that it doesn't look too cluttered. And I believe that they also have like how important those events are. Like, for example, today you can see this super fast release, this red lightning rod here. So that means it's a release that might cause you trouble, right? If you're in a live account, you might get slippage. It's not a great idea to hold your positions through this. And we usually have the initial jobless claims anyway on Thursdays at 1:30 p.m. my time. And then some of the other, less important releases, and then some Fed speakers. Yay, always excited to see those. So use this tool and use the calendar not to get stuck in these releases. So that's another thing that should go into a journal. At this point, those sort of releases are kind of second nature to me. Like, I know when they usually happen and I just generally avoid them. So put it in your journal, economic releases, whatever you've got for that day, not just for the week, but for that day. Why? Because sometimes when you're looking at the weekly calendar, you're like, that's tomorrow. And then it turns out to be today. And then you're running a trade, you get smacked in the face. So we don't want that. Okay, so we got a question. What is a failed auction? I always hear Hogue say it. Yeah, that is a setup where... Okay, so for example, if I've got my copper trade here, the first hour of trading in profile trading is called the initial balance. So once the initial balance is set, you have a range that you can use to determine how well the movement is doing. So if we have a move outside of the initial balance, on this chart and on my Bloodtech MP tool is represented by the blue extensions. If that move sustains outside of the initial balance, then you have a pretty good chance of a good, strong, sustained auction to the downside. But if we popped outside of it and then the price went back into this red area and then started to hang in there, that opens up a possibility for a failed auction, meaning the market participants tried to take it outside of the first hour trading range, they failed, brought it back to initial balance, and closed a 30-minute candle back inside. That is the textbook trigger for the failed auction. But you can kind of front run it if you have another level. Over here, we don't have any levels. Like literally, we had the overnight low that already got smashed. So now that's another thing that made me think, okay, single prints left behind. Single prints meaning a strong movement that leaves like a gap. Some people call it fair value gaps. Other people can call it, liquidity gap or whatever. There's like a million ways to call it. But in the end, it all pertains to the same thing. It's a decisive move that takes the price away from the previous area and sort of leaves a gap. So it means a sustained auction is in progress. We have a pretty strong decisive movement with not a lot of buying wicks there, and then we just look for a continuation. Obviously not foolproof, there will be times when things are not as clear, and you will see things like we get this sort of a move and then it goes back and then it starts to meander and then it's like so it gets a little bit difficult. But for the most part, if you see single prints, then you should be okay for any kind of a trending. Okay, like I said before, yes, the initial balance is the first hour of any active exchange. So depending on the product that you're trading that might be different for the New York session, but for London, it's always 8 a.m. London time all the way to 9 a.m. That's the time when the London initial balance is set. So we can start to look for evidence of the other time frame participants coming into the market. Other time frame means large institutions with deep pockets that can make these sort of moves, because market makers that operate during the initial balance, during that first hour, it's very messy, right? Because all they want to see and all they want to do is just grab some commissions and pump some nearby levels, thereby shaking out the weak positions and grabbing some money for themselves. But when you see these sort of moves, this is almost always some sort of a result of institutional activity. So yeah, going back to the journaling, what should go into your journal? So like I said, time of day should be a big one. Level that you're doing it from should be another one. You should also have some way to figure out whether it's a range day or whether it's a trend day. So for me, obviously I use profile, so that makes it a little bit easier to see. But for me, if I see the price kind of failing the auction, that might be the first sign of a quieter day. And then if the price extends all the way to the opposite side as well, that might be a sign that I should look for a return to the middle. There are still subtleties over that, because if you have a strong move to the opposite side, maybe wait it out to see whether it's a day that started off to the wrong side and then market participants carried on. I like to call those asymmetrical neutral days. They're not very frequent, they are, reasonably rare, but they do happen. So either case, you need to have some way of figuring out whether it's a trend day or whether it's a range bound day, and then figure out whether going long from VWAP is a good idea or not. Because in most cases of range bound days, VWAP is very good as a mean reversion target, but not very good as a trade location. Okay, so Wally Garrett says, I know you use Edgeful or whatever. Yes. Do they have any statistics when it comes to initial balance? Yes, they do. Let's have a look at Edgeful. See, that's something that you can also include in your own plan and your own journal to track things. Here it is. So futures, price action. Since I wanted to see some stats on copper, because it is a new product for me. Where is it? So here is initial balance breakout. So what is this measure? It's a measure that tells you how often you have a single break to only one side of the initial balance and how often a double break happens. So both sides of the initial balance get popped, which implies that at some point of the day you might have had a failed auction first. That should be like your first sign. So let's have a look at something closer, 6 months. Yeah, so it's about the same. So about 60% of the time in a 6 months to about a 2-year sample size, copper breaks the initial balance to one side only. So we can use that, right? Instead of always expecting a range bound day, you can say, well, actually, we are going to have that trending move downwards, and it should have a 60% of probability of working out over long periods of time. I would also urge you to stop looking at your trading from a trade by trade basis and then and even day by day, and then freaking out that, oh my God, I couldn't get into an NQ yesterday, I missed out. Just look at it from the point of view of probabilities. How probable was it that we have a massive trending day? Well, we know that those sorts of days only happen about 15 to 20% of all tradable days in a year, right? So that's pretty rare. So even if you didn't manage to make money yesterday, you can just pitch it to an unusual day that falls into that 15% and just go, okay, thank you, next, yeah? And not get super emotionally involved that, you didn't quite manage to get in on the move. Because to be fair, those sorts of moves, everybody finds them very, very challenging. It sort of requires you to suspend all thinking and just go, okay, sell. But in the light of a strong bull run that we've had, that's an extraordinarily difficult thing to do. So unless you have some other ways to figure out what's going on intraday, have very good situational awareness and demand good levels to try and get in on those moves, you're not going to be missing out too much. We want to aim for consistency over jumping into any old move and using the old, it's moving, I must get in. So we can't do that. So yeah, let's take some questions because I feel that if you guys want to start doing this sort of journaling, some kind of process needs to be in place. So throw me your questions and then we can discuss. Yeah, so I get you. Savage San says, the issue with Topstep journal is at the moment you lose Combine or XFA, you lose your journal to review for future purpose. Yes, that is something to keep in mind. So most of us who have been doing this for a while, we already have like journaling platforms and stuff, but it's just nice to see, because, you know, when you are in a Combine, you tend to do some odd decisions. So it's not a bad idea to maybe just track it that way. And you can always have a backup, you know. You need to have a backup anyway. But I actually like the fact that back in the day when I was first with Topstep, which was like, God, it was like 8-9 years ago now. It was a very long time ago. They actually had a journal on their old dashboard. And I used to use it a lot because it was so good to just, you know, go into the day and just do the journaling. And yes, obviously when they revamped the site, that all went. But I also kind of copied that into some of the stuff that I had on the side. So I kind of had it in both platforms. And I could also track how I was doing in a Combine versus the live account versus my own personal account. And it's pretty revealing how that daily loss limit really can increase your like pain point, if you know what I mean. Because, you know, I'm somebody who's traded anything from, you know, 1 contract all the way up to 120 contracts. But somebody gives me like $1,000 loss limit and suddenly that pain point just jumps massively. And yeah, so it's something to think about. It's certainly interesting just from a psychological point of view. Yes, exactly. So Bruno says you can fill out your Topstep journal and do the screenshots. Xavier, I'm in a short, just in a short copper trade right now because we opened below value. Yeah, let's talk about this copper trade. So why did I go into a short? First of all, the value area from yesterday London is up here, right? Where are we opening today? We open just under Asia high and immediately made a bearish engulfing on a 30-minute chart, then kind of started a little bit and then fell away. Now, opening inside range from yesterday but below the distribution curve, to me and to quite a lot of profile traders, has a bearish sentiment to it. So it means that the likelihood of price going down is high. The second hypo there would be if they immediately push it into the value. We have that special situation play where the value from yesterday, the distribution from yesterday gets accepted, and then they effectively rotate all the way up to the other side of the value area. It's a very nice tool. Obviously, like I said, nothing is foolproof, right? But it has a pretty high frequency of occurrence and a very high probability of bringing you a nice sustained auction move down, which is what we're seeing here. So my hypothesis there was that if I break the initial balance and we go below the Asia low to close below it, that was my hypothesis. And as that was happening, I saw that and I'm like, yeah, okay, this is definitely going down. So I got involved, and now, you know, I'm looking for the average session range as my kind of final stopping point. So the session and daily ranges, averages are sitting between sort of 435.61 and 434.22. And full disclosure, I did do a little long DAX trade in my private account. So I managed to grab, not much, I think I managed to grab about 30 ticks out of it. Purely because whenever we have a very big drop, which is something that happened today, we have some sort of a move back up. So this was the initial balance for DAX. I know we don't have it yet. We're still working on getting it into Topstep, but it is a great instrument to trade. We're still inside the initial balance. So for the next trade, I'm probably going to wait until after this stream to see what they want to do with it. DAX has been really quiet. We're opening inside value, which means inside balance. And that makes things a little bit muddy for me. It means that we have the initial balance as potential reference point. But like I said, until those other time frame guys step in, everything's a bit wishy-washy and not quite smooth enough for me. So, yeah. Okay, Avery Lamb says, can you teach us how to identify if the price action is accepted or rejected in certain areas? Really struggling to understand it. I would say that you need to first have a level that you're looking at, and then to use very simple price patterns. You can use, I prefer to use bearish and bullish engulfings for that, usually from slightly lower time frames. I'm going to show you what I do with some of my decisions. I have a very simple kind of timing tool that so it's not exactly for beginner traders. So let me just do the disclaimer that whatever I say here, it's mainly for educational purposes. If you find value in it, that's great, but I'm telling you what works for me. So one of the ways that I can find very, very good entries for low probability, for low risk, is to look at a very simple sort of VWAP with standard deviation curves on a 1 minute chart, and then a 9 period EMA. I also use equivolume candles here for this purpose. I hear the equivolume or something similar is coming to Topstep X, so we are going to have something like this in Topstep, because it removes the need to have volume somewhere else, and then you're like, is that this candle? And I always find myself trying to sift out whether it was on this candle or the previous candle. So just having like the equivolume candles just smushes everything into one candle. You can clearly see what is going on. So I have a couple of setups that I like to look at in relation to this, in addition to my profile levels. So with the profile levels, I have the value area outer edges, I have average daily and average session range, which is my twist on the average daily ranges using just the regular trading hours. And obviously I have the market generated information, which is the edges of the initial balance. That provides me context, those three things, right? And then we come to the timing of the setup, which is an entirely different thing. It's not, hey, I've got a level, I just plow in and then hope for the best. No, we need evidence that somebody else is moving the market in our favor. Now, for copper, I'm looking at continuation, but as we keep dropping down, you will notice that on this chart, we're starting to sort of wag around the 9 EMA on a 1 minute. So far, we still don't have any evidence of a reversal, and I do want to see that drop further down, but the closer you get to this sort of second and third standard deviation zone, the bigger the chances that we're going to have some sort of a ping back to the other side. And there's, it's basically a mean reversion setup. So there's certain, again, subtleties with every single setup that you can learn as you kind of observe the markets more and more, and as you start to journal in this way, in a systematic way, tracking the same things every single day, keeping what's working and getting rid of stuff that is not working. So now we're seeing a bit of a drop here. If the price moves further away from this 9 EMA, it will mean that the momentum down is still happening. But if at any point we get a big old fat candle upside that overshoots like 4 or even more of the trending candles that we had prior, and then it's a pretty thick candle, that would be my exit, because that means that we've had some sort of an exhaustion of the move and it's time to just bail. That would mean a rejection of the level. In this case, the level here hopefully is going to be my average session range low at 435.71, but I always have this on the other side, and I'm always kind of keeping track of what's going on with these sort of candles as well. Like, trading is not rocket science, but you do need to take in a lot of information in a very short space of time. So that's where the challenge is. And therefore, if you're somebody who doesn't have that great of a memory, that might be a little bit difficult. And this is also where journaling comes in, you know. In Serbian, we have the saying that says paper takes everything. Like it can suffer through anything. So you can put everything on paper and you can always go back to it and you can always scribble on it and, you know, make notes, the more experiential data that you have. And then let's kind of fast forward to, let's say, 3 months from now, and you're thinking, oh God, this is still very difficult. What's going on? But then you go back through your notes 3 months prior and you see how much progress you've made. And you're like, so I stopped doing that. I stopped trading the open. I stopped using super tight stop losses that used to smack me on the face for quite a few trades. Oh, interesting. And then you can sort of take pride in yourself that there is progress there. But without journaling, guys, we're not going to know what the hell we're doing. And this is why it's so important to bring the journaling into your development as a trader in general. Okay, crypto neophyte. Morning, Dee. Have you ever struggled with your mindset in trading that negatively impacted your trading results? If so, how did you overcome this? Did you read psychology books, meditation? Thank you. Yes. Right. I did make a YouTube video on my own channel about this. I had a loss like 2 years into my trading. And I started trading 16 years ago, and I was a swing trader. So I was doing pretty well. In 2 years, I went from like 2K up to about sort of 70K, all swing trading, keeping positions for 2 weeks up to 2 months. And then one day, I got very overconfident. And I started thinking that I can do no wrong, because I had a system on Eurodollar back in the day that was making me like 73% hit rate with like 5R multiples targets on average. It was ridiculous. So naturally, Dee thought, I can do no wrong here. So I built up the account and then I got like just completely biased and kept moving stops. So I lost that money. But, you know, it wasn't any kind of cash that would affect my standard of life. It was just very painful because it was like all of the profits that I spent 2 years building up. So I really wasn't happy about that. And I did suffer from some fear. Suddenly I was like, why did that happen? And that kicked me off on a big psychological journey to learn as much as possible about the fight or flight response, because that's what it was. One thing that helped me massively, aside from like reading about psychology books, is to go and do weightlifting before I trade. I mentioned that yesterday briefly to somebody who said they were struggling with like revenge trading. Just go do weights, because that naturally drains the glycogen from your muscles that are the fuel for the adrenaline that we get during the fight or flight response. And every time you're doing muppety things, it's always the fight or flight response. There's like zero doubt about that. So obviously educating yourself on why it happens, the biological processes behind it, and how you can prevent it, that's actually going to be very useful. I don't really have any mindset problems recently. So I've been doing the prop trading for 11 years. And since that initial loss, I mean, you know, if we look at it like dollar amounts, yeah, I've had bigger losses, but they weren't anything significant because they represented like maximum like 10% of the account that I was trading. There was one day when I stupidly got stuck in an FOMC position. I was a prop trader. The account was somewhere around sort of like 2 or 3 million. Like it was somewhere around there. And I managed to lose like 230K in the space of about 3 minutes. So this is why I don't do releases, because it, you know, whilst it didn't make a huge dent in my account, it wasn't very comfortable. And walking back into the office after that kind of a loss the next day was the worst thing ever. So yeah, I learned what slippage is. I learned not to trade through those releases. because we simply cannot allow those things to happen. We cannot allow stop losses to just randomly not be respected and be a bit pig-headed and try to effectively gamble into those sort of releases. So that taught me a very difficult lesson. This was probably 2015 or something. So since then, I've never traded through that kind of a release, and I never will. So I suggest you do the same thing. So yeah, I have struggled with mindset, probably less so than some other people, because I was a musician and an athlete my whole life, so I'm pretty emotionally resilient. I don't really allow monetary losses to affect me in any kind of significant way. So yeah, you have to work on that, and you probably have to work on your relationship with money as well. You know, that's pretty important. I would also say if you're somebody who's not very good with personal finances, I'm going to get so much slack for this. You really need to take a look at that first before you become a trader, because the money management, this is all that we do as intraday traders. So if you're not good at money manager for your personal account, why do you think you will be any good as a day trader? This is like money management on speed. Yeah. So if you can't control yourself from buying stupid stuff in your normal life, like you have to have the new shiny phone, and you have to get a new car, and you have to like buy all the stuff that really doesn't matter, and it's all just liabilities that suck money from you, and you're constantly in credit card debt, and you're never paying it off, you're only paying off the minimum sum, and you have no idea what you're doing there. Educate yourself how to better be a money manager in your personal life, and I promise you that will have a very positive effect to manifest those good habits suddenly in trading. You know, put it in the real world context rather than everything just being like a number on the screen, right? Robbie Axelrod says, Dee, what is settlement value area? Those two things are actually two different things. Settlement is the former open outcry pit close, which still has relevance even now in electronic trading, because those sort of behaviors were carried over into electronic trading as well. So on financial juice, at the end of the day, for crude oil and gold, things that usually close earlier. I mean, you can still open and close positions, but the volume drops off massively after that. So that's what I mean with settlement. It basically closes the open outcry pit former hours at a particular price. That settlement price can be a very good retest area, especially if you can match it up with something else. It's actually frequently an area that the price tests and then reverses from. I like to pair it up from the outer edge of value. So if I have a settlement somewhere around there, that definitely becomes an area of interest for me to kind of go against them. So whenever we hit settlement from, let's say, below, might try and short it from there, and vice versa. Value area is nothing more than the distribution curve from the previous day. So if I go back to my standard charts, you will always see some kind of a belly from the previous session. 70% of that belly is what we refer to as the value area, which is basically the area where the price conducted most business, area where price spent the most time for that session, right? I like to use separate sessions, and I never mix and match. So if I'm trading London, I will only be looking at what happened during London only, and I cut off my London session calculations for this particular product when COMEX begins. That's 1:30 p.m. my time. And that's, 8:30 a.m. Eastern, and I think it's 7:30 CT, Central. How did I overcome fear? I overcame fear with weightlifting. That was the only thing that helped me. So I would go to the gym, and I would literally just totally go for it, right? At one point, I mean, I did bodybuilding competitively as well. So I was a bikini fitness competitor, and I actually won quite a few trophies. So that was something that was very, very helpful to overcome any emotions. So I would literally just go and do like 170 kilos of leg press for reps. Or I would go and do deadlifts. I'm a pretty small person, so I was deadlifting 70 kilos for reps. And after I would do like about 70 to 90 minutes of that, so roughly about an hour and a half, I would then go sit in the sauna for a while and just sweat it all out, go take a shower, come back home, and then sit at the desk. If I was going into the office, I would usually have a gym right next to the office somewhere, which is like within walking distance. So I would be doing that. Same thing, always a gym session, weightlifting, none of this cardio nonsense. Cardio is useful for like general conditioning, but it's not gonna, like in order for you to drain the glycogen reserves, during cardio, it's going to take you like 45, 50, 60 minutes, depending on how hard you're working. I don't like doing HIIT, like high intensity training, especially not in my age, primarily because I think it raises my cortisol levels. And, I'm going to be 44 this year. I don't need any more cortisol in my life. So I try to if I am going to do cardio, I just try doing like walking or something. I've got 8 dogs, so I'm always walking. But yeah, so weightlifting was the primary thing that dealt with my emotions, and it's super useful. It releases all of the negative energy, and by the time that you come to actually do your trading, there's no more fuel for the fight or flight response. So all of the emotions will be vastly minimized, and your prefrontal cortex can actually start doing the thinking and trading for you, rather than you letting the whole thing just run riot and make a huge dent in your P&L. All right, since I am talking a lot here, we are kind of coming into some area where I can see a little bit of a bounce. So I am going to take off this this copper trade for, very respectable $471 for the session, minus the fees, obviously. So yeah, it's pretty good. So yeah, this was a trade where I took, a portion of the trend for the day. Yes, we're probably going to keep dropping, but I want to kind of focus on talking and answering your questions from here on out. So we had one trade. I explained that to you. So open below value, bearish engulfing as a directional indicator, and then the final trigger signal when we went over the overnight low and into some single prints left behind on the profile. That was the trigger. So pretty happy with that. A question, why short platinum? I have no idea. I was shorting copper, so I didn't touch platinum. This was copper. I don't think platinum moves that much for London. I think it moves okay, but the problem I have with platinum is that it's already a thin market, and let's have a look at it. Yesterday I kept trying to, I had a short, and I should have just left it, but I ended up landing it, and then kept trying to long it, and then, it just wasn't great. So I ended up with a 500 loss yesterday. So I'm going to try not repeating that today. But shorting platinum, I shorted platinum yesterday because it was a gap fill. But today, I'm not shorting anything there, even though technically it has a similar view to copper, but we're still inside the initial balance. That's a big difference. So to me, by the time that we traverse 2 hours of the session, I don't want to see 67 ticks. That's ridiculous. That's very small. Anything below 100 ticks for the first couple of hours of trading, I don't want anything to do with it. Platinums are already so thin that even during New York, when you enter a trade, you have a 2-tick spread. I don't even want to know what happens when you try and do that during London, because I can imagine it's going to be even slower. And yeah, today, it just doesn't have enough movement. So anything sub 100 ticks, I just don't think that's enough movement. So copper had the most movement for me today. and it extended the initial balance. That is my signal for any sort of momentum moves, anything inside the initial balance. It's all market maker playground and very, very slow, very difficult on most days. So I dislike trading the price, whether it's for the actual initial balance time or when the price is actually still stuck inside the initial balance range. So I want to see some movement outside of it. And then whether we fade it or go with it, that's a matter of context. Colin Brown has a good question. Do you see any utility in indicators like CCI plus 200? You know what? For intraday trading, I see very little point. For RSI, CCI, anything like that, by the time those indicators show you that something is happening, the move has already been and gone, right? So this is why I dislike it, unless you're going to use it on a super small time frame, which then introduces a lot of noise into it. So I would say just keep the context from a higher time frame and then work downwards. Maybe you might find it helpful on like a 1 or 2 minute charts, but again, the caveat there is that a lot of those low time frames comes with a lot of noise, and a lot of people get very, very confused over what they should be looking at. And you know, when I'm looking at a candlestick chart on a 30-minute chart versus a 1 minute chart, they're very different things that I want to see. So even though we might have, like, let's say a bearish engulfing on a 30-minute chart that is just like, actually, let's try and find an example. So here we go. So we had a bearish engulfing at the start of London. So there it is. So one of them is this the candle from the previous session, and then we had this bearish engulfing. Now, for all intents and purposes, this is actually a pretty strong indication for a 30-minute chart. But if I go down to a 1 minute chart and the same thing happens, so we only have 2 candles and it's not even going below the second candle, that's actually a really terrible signal. So if I go down, let's say 1 minute, and then look for a bearish engulfing somewhere in here that looks the same. Let me see. Let's go up a time frame because I can't find a good example here. So 5 minutes. Okay, so here we go with a bearish engulfing on a 5-minute chart that I actually consider a weak signal. So here it is. And even though eventually it brought like a good reversal, for the most part, let's imagine that we're on a 1 minute chart. Until such time, then this bearish engulfing candle engulfs at least 3 trending candles and closes below the 9 EMA, it's not a good signal on a low time frame. I don't want it. I'm like, no, that's not good enough. So the lower the time frame, the more diligent you have to be in what sort of a signal you're looking for, if that's what you're looking for. Now, if you use Bookmap, you might be able to see things such as orders coming into the market, which you can pair up with a weak signal and then see whether there's a true push in the other direction. Yeah, but using, lagging indicators for intraday trading, I've tried most of them, and I stuck with the idea of VWAP and this 9 EMA for a very low time frame timing, but for everything else I use profile in real time, and I use some of the market generated information to rely on high probability levels. Without that, you don't have a method, so you need to develop those big sort of orientation points, how you're going to do things. The Orient Earl says, "Hi Dee, what is your average tick/points for ES for profit taking?" Okay, so that will depend on what time of day I'm trading ES. Typically, I don't really like to trade ES until the very end of the day. So that means more of a scalpy type trade. Those sort of trades, I kind of look for the old pit trade where you get the short squeeze and the market kind of pushes in the opposite direction. And then I will just chase momentum. So that's the only time that D becomes a scalper, at the end, usually around the last sort of 30 minutes of trading. I will find my ES trade make a trade and run. So yeah, typically I think for those types of setups, I might use like 35 to 40 ticks for profits, but I will take whatever the move gives me, and I do use bookmap heavily for that purpose rather than the regular candles and regular levels, because all you're looking for is just a bit of momentum there into the end of the day, into the MOC. So it's a slightly different, tougher trade. But for most of my other instruments, I will aim to take anywhere from about 60 ticks all the way up to 140, 150 ticks if we're talking RBOB, gasoline futures. They're more liquid. But yeah, to put that into perspective, I aim to usually risk between 17 to 35 ticks on any given product, and then it depends whether the tick size is like $10, $12.50, or 5 or 420, which is gasoline futures. I will modify my profits and expectations for those types of trades. Now, on crude oil, I am able to capture pretty high risk reward since I went down to drill into the timing. So I have been able to use a 17 tick stop and then to aim for 60 to 80 ticks stop profit target. But I know crude oil to its core, and even though it kind of misbehaves on me sometimes, I know how that market breathes. It's been my core market for 11 years, so I wouldn't suggest that you try to do that, because on most days it's probably going to be the case of you mistiming things or not finding the right opportunity for such a big move. But I literally wait sometimes for the entire day for this one opportunity on crude oil to grab this massive trade, and it doesn't come every day. You know, it's going to come typically about maybe 3 times a week, and then I can grab my sort of $800 and be done with it. Where can we learn your strategy? You can look on my YouTube. So beneath every video, there's like a whole bunch of links on my YouTube. So you can check that out if you want to learn that. But just beware, it's not for everyone. It's very statistical. It's very data oriented. But I try to present it in small bite-sized chunks. So no lecture is longer than about 30 to 45 minutes. I think I have maybe a couple of them that are up to an hour. And I think some of them are mostly psychology lessons, but usually I try to raise your skill level by bite-sized pieces. And on some of the levels, we do have a drip feed, so to prevent you from binge watching it and then completely missing the little nuances that I talk about. I've been told by many people who have done the course that every time they rewatch the lesson, in light of new experience that they gather while they wait for the new lessons to be unlocked, because it's on a drip feed, they find new golden nuggets that they've never noticed before. So lots of stuff to sift through. Woon Ping Lee says, Dee, when you're trading products such as gold and crude oil, do you solely rely on technical indicators only? Are these products news dependent? Gold and crude oil will always be risk-related products, but I am a technical trader. When I say technical trader, I dislike the term technical analysis for what I do. I call it market mechanics analysis, because I don't look at lagging indicators and I don't just go, oh, this is my 9 EMA, I'm going to go short. No, I go, what is going on the profile right now? Like, for example, if we take into account this copper trade, it's still going. You know, it's still going. It's still printing single prints to the downside. There is no reversal. New lower lows, you know, that's all market mechanics. It's like, what do we have? We have a sustained auction in progress. Where is the potential end of that sustained auction? Nobody really knows. But from some of my experiences and stuff, I know that 2 points can be very good areas to look for a stop of the move that we currently have. That's average session range low, or alternatively average daily range low. Best time to trade crude oil from the UK. It's main session. I like to trade it after 3 p.m. And then I typically try to do my first trade in between 3:30 up to 5 p.m. Sometimes I do 2 trades. One trade is sort of a fade of the move, and then if I couldn't find a fade then, I might look at the euro close fade, and that's the trade that I might run into 5 p.m. to 6 p.m. UK. And then finally I wait after 7 p.m. to find another move in the opposite direction. So those are the 2 times of day when I would suggest looking for pretty good setups. Okay, this is going to be probably the final question for today. Crypto Neophyte. Deeyana, in your opinion, if a trader was to start with Topstep, trading a 50k account, what would you recommend as being the max risk per trade? Many thanks. I wouldn't talk about it as max risk per trade because that's too trader dependent, right? Some people do 1 trade per day, other people do 30, some people do 10. So me saying, oh, risk per trade, that, you should do this, because everybody will be different. But I can tell you that whenever I'm doing a 50k account, I try never to risk more than about 1/3 of the daily loss limit, so about $300. Whatever you're doing, so however many trades you normally do in a day, divide that $300 by the number of expected trades you do, and then you're going to get your own personalized risk reward. If you go anything over that, I find that most people blow out of their combines already by day 3. We want to keep you in for as long as possible, developing that consistency. And on a 50k account, you only have two grand to play with. So if you're going to jump into a position where you're risking $300 bucks, if that's the only trade you do for that day, that's fine. But if you do 2, 3, 4, 5, you have to size down. So that's the gist of that. All right, guys. I guess we have time for one more question. So let's see. Somebody's saying that the link to my YouTube channel is incorrect. Is that true? Yeah, it's because he put @ I think there's an @ there. I don't know why that. It's a bit weird. Yeah, so we're gonna have a look at that. I'm gonna plop my YouTube channel in here if you guys want to check it out, because I do a lot of free videos. I have been on YouTube for a number of years. I'm not like doing like every day. But it's certainly something to visit, primarily because I'm someone who likes quality over quantity. So whenever I'm looking at doing a new long-form YouTube video, I want it to bring some sort of value. Yeah, I don't know why that keeps flipping to... That's a bit odd. So there you go. That's my YouTube there. I don't know why that's wrong, because when I load up the page, it sort of tells the right link and then it sort of turns into the weird long link. It's very odd. I don't have Discord. I don't want anything to do with Discord. I cannot. I don't know. So I don't have Discord. Let's just put it that. So, gee whiz, stay longer, Dee, let's trade. I've already traded, man. So this was my trade. I did a short copper trade, and that's it for me. I did 1 DAX trade and 1 copper trade today. 1 in my live account and 1 in a combine. This will be it for me. So now I go and rest, walk the dogs, have a nap, because I'm an old lady. And yeah, that's going to be the London session trading. I don't trade a lot, guys. Like in the entire day, and I do trade through 2 sessions, I will only do about like 5 to 7 trades max, and that's across multiple instruments. I wasn't okay, so let me clarify this. I wasn't a programmer professionally, okay? I would never think to call myself a coder. Can I code? Yes. but I know my place in the world, and I would never say to myself, oh yeah, it's going to be. Yeah. All right, guys, I'm going to finish it up here. So just going to remind you of a couple of things, the new programming that we have. So obviously we have the London session, Monday through Thursday at 3:30 a.m. CT and 9:30 a.m. London time. We have just released the Topstep X journal, obviously. Don't forget the Topstep X feature voting, which you can access, like I said, at the beginning of this session by clicking on the support button with a question mark, and then you can request new stuff there. Let's work together to build this platform. And of course, we have the journal. So just let me show you. So now we have another thing here. So I can now write in my journal here that I did copper sustained auction down on open below value. So that was my trade. I'm going to save that. And now I have the note there that tells me that I've actually written something there. So don't forget that Dakota now has an additional session. So he starts streaming on Sundays at 8 p.m. That is a new session, new segment. So I'm definitely going to try and rewatch that, because that's like middle of the night for me. That's like 3 a.m. for me. But I do rewatch most of his sessions because I think he's very good at what he does. He's very interesting. And I'm looking forward to seeing what sort of a method he's going to be doing. Somebody says, I love the video from 8 years ago with the purple hair. Yes, I used to have flaming red hair until like 4 years ago. And then sort of COVID hit and I just couldn't be bothered. And then it sort of faded into weird blonde. And then I went gray. So now blonde is just like so much less maintenance. But I might go back to red sometime. That might be quite soon and quite fun. I was mainly a so you have a musical background. Could you sing something on your way out? I was mainly an instrumentalist, so I was musician, sax player, and an electric guitarist. So you can probably find some stuff on YouTube from where I was doing that sort of stuff. Those of you who have looked far enough will know what I mean. But no, I'm not going to be, it's too early in the morning. Like my dad used to say, so let's finish this with a dad wisdom, jazz is not for the mornings. And I'm going to stick to that. All right, guys, thank you so much for joining me. Somebody's saying, can I review Dakota sessions? Why would I do that? Like, Dakota does his own sessions. I think he does a great job. That's the review. Yeah, he does an awesome job. That's the review. All right, so next session for London will be on Monday at 3:30 a.m. So let's do that all over again. In the meantime, enjoy the rest of the show today, because we're going to have fast markets, opening call. Obviously, Hogue is back, so that's pretty exciting. I know I'll be watching. So I'll see you guys in the chat. Take care, and see you next week.